In my view, blockchains could revolutionize the internet, but to achieve widespread use of this technology, we must address a critical challenge: scalability. A common criticism of blockchains, such as Ethereum, is their sluggishness, which hinders broad adoption. We've seen numerous alternative Layer 1 blockchains emerge, aiming to resolve this issue, including Solana, Aptos, SEI, Binance Smart Chain, Avalanche, and many others. In this video, I'm excited to discuss a new Layer 1 blockchain that's emerging, boasting to be the fastest in the world, even surpassing Solana in speed. This newcomer has started creating a significant stir in the cryptocurrency world, presenting numerous exciting opportunities, especially for developers, which I'll explore in this video. So stay tuned, as I'm about to break down everything you need to know in today's discussion. Let's dive into this new Layer 1 blockchain that's making waves by claiming to be the fastest in the world. It's called the SEI blockchain. This blockchain stands apart as a unique independent platform, distinct from other well-known ones like Ethereum, Solana, or Binance Smart Chain. It features its own native gas token, the SEI token, which, interestingly, has seen almost a tenfold increase in value over the past 90 days from its lowest point. The project has garnered attention due to its notable backers, including Coinbase, Jump, Multicoin Capital, Delhi Digital, and many others. On their website, they boldly describe themselves as the fastest Layer 1 blockchain designed to scale the industry, aiming to facilitate the mass adoption of digital assets. Let's look at some stats from their website. The SEI blockchain reportedly processes 20,000 transactions, or orders, per second, and boasts a transaction finality time of just 380 milliseconds. To put this in perspective, let's compare it with other blockchains. SEI's 20,000 transactions per second is double Solana's 10,000. And when we look at transaction finality, SEI's 380 milliseconds is significantly faster than Solana's 2.5 seconds. Now, if we contrast this with Ethereum's Layer 1, excluding Layer 2 solutions, which I'll touch on shortly, Ethereum manages roughly 20 transactions per second with a transaction finality of around 6 minutes. If you're enjoying this deep dive, why not hit that subscribe button? Join our CryptoBuzz community for more insightful content. The concept of scalability is a critical factor in the success of blockchains, and it's one of the primary features advertised by the SEI blockchain. So let's break down this idea, starting with scalability itself. As I mentioned earlier in this video, a major issue with blockchains is their relatively slow processing speed. To make blockchains ready for widespread mainstream use, we need a system capable of supporting a high number of users engaged in various activities simultaneously. This boils down to two key metrics: transactions per second and transaction finality. Transactions per second refers to the blockchain's capacity to process a certain number of transactions within a 1-second time frame. If a multitude of transactions are initiated simultaneously, how many of these can the blockchain handle in 1 second? This rate is crucial for evaluating the efficiency and scalability of a blockchain. Then we have transaction finality. This is about how long it takes for each transaction, once processed in a batch, to be permanently recorded on the blockchain. Faster transaction finality means quicker confirmation times for transactions, enhancing the user experience and efficiency. Both of these metrics, transactions per second and transaction finality, are essential in determining how well a blockchain can scale and handle increased demand. These two factors, transactions per second and transaction finality, essentially create a bottleneck in scaling blockchains. It's a common point of critique for Ethereum, often labeled as too slow for everyday use by many users. This is primarily because Ethereum has a limited capacity in terms of transactions per second and a relatively long block time, impacting transaction finality. In simpler terms, it takes a while for transactions to be included in a block on Ethereum. It's important to note, though, that this limitation of Ethereum is considered by some as a feature rather than a flaw, particularly in the context of Ethereum's long-term strategy, which includes scaling through Layer 2 solutions. However, I won't delve deeply into that topic in this video, as there are plenty of other videos on my channel covering it. This perceived limitation of Ethereum has led to the emergence of alternative Layer 1 blockchains like Solana, Binance, Smart Chain, Avalanche, Monad, and now SEI. Each of these platforms is exploring different methods to enhance the throughput of blockchains, aiming to improve both transactions per second and transaction finality. These blockchains each adopt a unique approach to scaling. Let's focus on how SEI approaches this challenge. One of their major strategies involves parallelized processing. To understand this, let's contrast it with Ethereum and Bitcoin, which use sequential processing. In computer science, parallel processing is a basic concept where, unlike Ethereum, transactions are not processed one after another. For instance, in Ethereum, if I send cryptocurrency to you and someone else sends it to another account, my transaction would be processed first and then the other, especially if they submitted their transaction after mine, or paid a lower gas fee. In parallel processing, multiple transactions can be processed simultaneously, not necessarily in the order they were received or based on the gas fee paid. This method can significantly increase transaction throughput and improve overall efficiency. Exactly, the concept of parallel processing in blockchain technology is a significant leap from the traditional serial or one-by-one transaction processing approach. In serial processing, as seen with blockchains like Ethereum, each transaction is processed sequentially. This means if multiple people are sending transactions at the same time, the blockchain processes them one after the other based on factors like the order of submission or the gas fee paid. Parallel processing, on the other hand, revolutionizes this approach. It allows for multiple transactions to be processed simultaneously. In a scenario where numerous users are trying to use the blockchain at the same time, parallel processing enables the system to handle these transactions independently and concurrently. This approach doesn't require waiting for one transaction to complete before starting the next. Instead, many transactions are processed at the same time. This method can substantially increase the number of transactions per second that a blockchain can handle, thereby enhancing the scalability of the system. By implementing parallel processing, blockchains like SEI aim to overcome the limitations of serial processing, making the system more efficient and better suited for high-volume usage, which is a critical requirement for mainstream adoption of blockchain technology. The core idea behind SEI's approach is to enhance the number of transactions that can be processed using parallel processing. While Solana already employs this technique, SEI claims to execute it twice as efficiently, positioning itself as the fastest Layer 1 blockchain globally. Another notable aspect of SEI is its move towards Ethereum Virtual Machine (EVM) compatibility. The EVM is the framework on which Ethereum runs. This compatibility means that developers who can write smart contracts for Ethereum can easily deploy these on other EVM-compatibility blockchains with minimal or no code changes. This feature is also present in other blockchains like Tron, Binance Smart Chain, and Avalanche. The significant advantage of EVM compatibility for SEI is its potential to quickly port existing Ethereum applications to its platform. This capability can enrich the SEI blockchain with a wide range of applications from the get-go, which is vital for any new blockchain. A rich ecosystem of applications contributes to the blockchain's value, as it offers users various tasks and activities. Furthermore, EVM compatibility allows for a smoother transition and quicker adoption of new technology. Developers won't need to learn a proprietary programming language or rebuild their apps from scratch, which can be time-consuming. Instead, they can leverage their existing Ethereum-based applications on SEI. However, it's important to note that this parallelized Ethereum virtual machine feature on SEI is not yet operational. It is slated to be a part of SEI's version 2, expected to launch in the first half of 2024. This development could significantly impact how quickly SEI gains traction and establishes itself in the blockchain ecosystem, especially among developers and users familiar with Ethereum. SEI blockchain distinguishes itself from other chains through several specific technical attributes, each designed to cater to particular needs within the blockchain space. Understanding these features helps in appreciating what sets SEI apart. While many blockchains broadly focus on financial applications, SEI is explicitly designed for this domain. Initially, it was developed to scale exchanges, but it has since evolved into a more general alternative Layer 1 blockchain. This specialization indicates a strong alignment with financial applications and services. SEI is built on the Cosmos ecosystem, utilizing the Cosmos SDK. Cosmos is known for its interoperability and scalability features, which enable different blockchains to interact seamlessly. By leveraging the Cosmos SDK, SEI can benefit from these attributes, enhancing its performance and integration capabilities within the broader blockchain ecosystem. SEI employs a proof-of-stake (POS) consensus mechanism. POS is popular for its energy efficiency compared to proof-of-work (POW), and is favored by many in the crypto community for its environmental friendliness. Additionally, POS allows token holders to stake their cryptocurrencies to participate in the network's governance and earn passive income, making it an attractive feature for investors and users. SEI incorporates mechanisms to protect against front-running and sandwich attacks. Front-running in the crypto world refers to the practice where someone gets a transaction first in line by paying a higher gas fee, potentially leading to unfair advantages in trading scenarios. Sandwich attacks are a form of front-running, where a malicious actor places orders on both sides of a pending transaction to profit from the price movement. By having built-in protections against these types of attacks, SEI aims to offer a more secure and fair trading environment. These technical features suggest that SEI is positioning itself as a secure, efficient, and financially oriented blockchain platform. Its focus on financial use cases, integration with the Cosmos ecosystem, use of a POS consensus mechanism, and security measures against common trading attacks are all strategic decisions aimed at carving out a specific niche in the rapidly evolving blockchain landscape. In conclusion, the SEI blockchain presents itself as a formidable player in the rapidly evolving world of blockchain technology. With its claims of unmatched speed, EVM compatibility, and a focus on financial applications, SEI is not just another addition to the landscape, but a potential game changer, especially for those keenly observing the crypto and blockchain sectors. As we look forward to the advancements and developments that SEI promises, especially with its version 2 launch, it's crucial to stay informed and engaged. Whether you are a developer, investor, or just a blockchain enthusiast, the emergence of SEI offers a unique window into the future of decentralized technology and its applications. So what does this mean for you? If you're a developer, consider the opportunities that SEI's EVM compatibility and high transaction throughput might offer for your applications. For investors, the SEI token's performance and the potential for new projects on this platform could be worth monitoring. And for those passionate about the future of blockchain, SEI's journey is a fascinating one to follow. What are your thoughts on SEI's potential impact on the blockchain ecosystem? How do you see its features and developments influencing your area of interest or expertise? Are there specific aspects of SEI that you find particularly promising or have concerns about? Share your perspectives and let's continue this vital conversation about the future of blockchain technology.